Hi, it's Arjun. As longtime Super-Spiked subscribers know, we are not about trying to give the hot takes on the controversial issue of the day. But with that said, it has been an incredible first week and a half since the US inaugurated its 47th president, who also happened to have been our 45th president. Just a fire hose of Trump-driven news that has instantly recast global narratives, whether that's around energy, geopolitics, or a whole host of other topics that we don't and won't normally cover in Super-Spiked. The World Economic Forum's Davos gathering, the annual gathering, also happened last week, and some news out of that. And of course, what took the market by storm last weekend was DeepSeek, a Chinese AI program in the vein of ChatGPT, putting on the iPhone App Store their version of ChatGPT, and the thing went viral. The actual program's been around for a little bit, has been DeepSeek, but clearly it's really rocked markets more broadly, but especially that tech and AI trade that we've seen drive markets over the last year and a half. And we're going to try our best to put this torrent of news flow in the context of how we try to approach things from Super-Spiked. What does this mean for the longer term energy macro outlook, corporate strategy, and policy, and those kind of considerations? And I will do my best to not just give hot takes. So let me start with this topic of DeepSeek, and I'm going to try and limit my comments to the implications for the energy sector. You can clearly look at other sources for what this means for NVIDIA or tech or a whole bunch of different perspectives. But the question I want to start with is really, has the death of China been greatly exaggerated? And of course, China's been a really critical country to the whole commodities theme since it emerged in the 2004 timeframe. It was a big driver of the China and BRICS period. And of course, people have been worried with some of the demographic challenges they're facing, with some of the economic challenges and so forth. Real questions as to what is going to be China's contribution to, let's just call it oil demand for what we're talking about going forward. And frankly, a lot of pessimism. Some of it's deserved. There's no question there's been a downshifting in what we can expect for China going forward. But the sort of perspectives, I think, consensus view that people have is that this is going to be the next Japan. Japan, famously as a country, grew dramatically from its devastation after World War II in 1945 to the peak in 1990. And it's been somewhat described as a couple of lost decades. Population has rolled over. And is China going to be the next Japan? And I would just observe this, and this is where we get to DeepSeek. It just so happens that China looks like they're going to be dominant in low-cost electric vehicles, a critical future component of transportation markets. We can debate hockey stick and S-curves and penetration rates in developed markets, all those kind of normal caveats we like to have for how fast electric vehicles are going to grow. I don't think there's any debate, though, that at least right now, BYD and some of these China electric vehicle companies have some of the best low-cost vehicles on the market. And there's certainly considerable scope for them to be a dominant player, if not the dominant player in that going forward. And now a lot still to be learned, especially for an energy analyst like myself on DeepSeek. But they seem to be, at least at this moment, far more competitive in this sort of AI thing than what markets thought just a week ago. Maybe some of us, broadly speaking in the market, were a little bit sleeping on what China could do. But whatever the case, they've now burst onto the scene. And these are two really important future winning areas. And I think the final point we just simply make is this is a country, China, with still 1.4 billion people. And even if they're on the verge of population decline, where that goes to 1.3 and 1.2 and ultimately 900 million people or whatever the long-term numbers are, this is still multiples of what we have in the US population-wise, what Europe has. You can combine them together. China population-wise is still bigger. And unlike Japan, which when they peaked were unquestionably a rich country, that is not the case with China. So some of this Japanification question might be for those that study China and Japan geopolitically and macroeconomically than, say, an energy specialist like myself. But as it impacts future energy use, I am going to push back and ask, I don't think it's a done deal that China's energy demand is not going to continue to grow. There are a lot of uncertainties. I am not dialing into my numbers a return to 300, 400, 500,000 barrels a day of annual oil demand growth. I'm not suggesting that. But I think the sort of China is the new Japan, I think we do have to call that into question. I'd say at a minimum, whatever you want to do for your counting barrels analysis. There's probably something to be said for cost of capital for traditional energy, that if it had become kind of a negative hit to cost of capital, higher valuations, or excuse me, lower valuations, higher cost of capital, maybe there'll be some rethink there. China is going to be a leader in a couple different areas. I think the second big question coming out of DeepSeek, excuse me, is the power super cycle over, perhaps before it's even gotten started? And I'm going to already answer them and say we don't think so. As a reminder, when we think about the opportunity in power markets, it's kind of a trio of different things. The first is in developed markets, an aging grid, growing intermittent resources, and premature retirement of base load. And all that, I think, collectively needs to be addressed. That's investment. You have both developed but also developing market, just core economic growth. In developing markets, that's moving up your S-curve. In developed markets, that's, of course, some of the reshoring and electrification trends that I don't think are going to stop. And then the last area, of course, has been, quote, AI. But in many respects, I think AI gets too much credit for being the entirety of, let's just call it a digitalization trend. And that, I think, is still a massive trend. There's going to be a lot of data centers, hyperscale data centers. Certainly, there's some uncertainty in terms of exactly how much power, exactly what the cost is all going to be. I think all three core elements of why power is generically an interesting area continue to hold. Now, we've said this before in prior videos and write-ups. A power super cycle is not the same thing as what one would expect, say, in oil, or for that matter, in tech. In oil, you have demand pushing up against a resource constraint. You get a big price cycle, a big ROCE cycle. That, the last super cycle, the 2000s, I think it's going to be very different than how we think about power. In tech, we've been in the midst of a major super cycle, and I'll show some graphs in a second here, where structural growth, structural returns have just been outstanding. Power is different, and I think you have to take it on a case-by-case basis. What is this specific company doing? What are their opportunities for returns? What is their differentiation? How are they going to help meet the world's power needs? And I think that is still kind of the framework by which we're going to look at it. I think in terms of some of the stock price reactions, I think we are respectful of the fact that when you've had a major momentum move, when you get your first second derivative hit to it, it's hard to know exactly where bottoms are. That is not the purpose of Super-Spiked. We're not an investment focused, short-term trading focused blog or video series, whatever we want to call this. And of course, we've been in an environment where suddenly power demand got revised up, and it got revised up again, and it got revised up again. And with DeepSeek, for the first time, there are legitimate questions of, did we revise it up too much? And when you get that, and stocks have moved as much as they have, it is natural to have a big momentum correction. Again, it is not within the the interest of Super-Spiked to say we are at a bottom or not. What I will say, though, is when I look out over the coming decade, I think this notion of a power super cycle is still something we very much are believers in. And then the question is, how are you going to fuel it? What's your mix of nat gas, nuclear, coal, new energies, and so forth? And then what are the companies and the business models by which you'd want to support that or not, as the case may be? I think the last sort of DeepSeek implication is, I'm going to go through a couple of graphs here of tech versus energy on returns on capitals and CapEx. And maybe I'll go through the graphs to illustrate my points. So this is a graph of return on capital employed for, as Bloomberg defines, the Mag 7, Apple, Google, Amazon, Meta, Microsoft, NVIDIA, and Tesla. And I think first caveat I'll give is that we have always prided ourselves on the quality of our models and analytics. It's something I prided myself at Petrie, JP Morgan, and Goldman Sachs, and to this day at Super-Spiked and at Veriten. This I'm going to call the equivalent of a generalist portfolio manager's screen, which means it still needs more scrubbing. It still needs some more deep dive work on our team's part in terms of some of the nuances of individual companies. And I feel it's important to caveat that because I do otherwise pride myself on the quality of the modeling effort. With that said, I don't think there's any question that the returns on capital for tech companies in these Mag 7 are simply off the charts. 40% returns on capital for this group of companies. And look at NVIDIA, you get why people have been so enthusiastic about them. Not only are you getting great returns, you've also gotten, in some cases, 20, 30% kind of top line growth. Growth and returns And you get why tech has so outperformed the broader stock market and has outperformed the energy sector, which is what we care about. The question is, are those returns peaking and is something changing? And that gets us to the CapEx point. If you look at, again, the black line Mag 7 CapEx, I think when we update this going forward, we'll probably try and, I'm not sure if Tesla needs to be on this graph. We're going with Mag 7 here. We might kind of figure out sort of an AI CapEx version of tech-oriented companies. But either way, if you've historically been a software company, which almost by definition is CapEx light, and you're Microsoft, which as an example, in 2023 spent almost $35 billion, up from just 10 or something like that, a much smaller number, just several years ago. And I think they're talking it's going to be higher in 2024. They're talking $80 billion, I think, in the current year. This is just dramatic growth in CapEx. I don't think you have to be a cyclical, deep cycle analyst like we are in energy to recognize when CapEx dramatically grows, you do have to wonder, what is that going to mean for return on capital employed? And I think, again, to the credit of these tech-oriented companies, they've done a great job with profitability historically. And I think this will be the case for moving into energy or other areas if, in fact, some of these returns on capital do start to roll over. That I'm not a tech analyst. Again, I'll say that. But I can see, as someone who covers cyclical sectors, that's a heck of a lot of CapEx with, I think, an uncertain return attached to it. So let me shift gears to talk about Davos and the World Economic Forum. And I was really taken by some of the video clips and write-ups I've seen for folks that attend. I did not attend, just to be clear. I've never attended Davos. My big takeaway is there was little doubt, if you watched any of the Davos, the World Economic Forum, which by the way, for some reason happened the same week that Trump was inaugurated, and at his first week of sort of fire hose executive orders and policy pronouncements and so forth. But there's no doubt that the world has moved on from the idea that net zero, as well as ESG and sustainability, are the defining global narratives. Now, when we were at such an extreme, let's just call it, we were at peak ESG, peak net zero, just 2 years ago. There's going to be an instinctive, we need anti all this stuff. As you know, that is not my view. I don't believe anti this stuff as much as I believed in these initial causes to begin with. There's no doubt that these are not the defining global narratives. They never were, okay? They never were. That's why we write Super-Spiked. That's why we unretired to Veriten. It's been our passion to push back against the ideology that says you're trying to invert your hierarchy of needs and for somehow only focus on carbon emissions as how society organizes itself. Never been true. None of that is to say, though, that we shouldn't care about this at all. And we should care about environmental outcomes. I think we will care about carbon emissions. And I think there is a role to be played for governance, for health, safety, and the environment, and for having and ensuring a broad range of the best views possible are reflected, whether it's on a board or management team or what have you. So there are elements of this that I've always supported and continue to support. The world's not ready for the nuanced discussion right now. And I'll say my takeaway from Davos is the attendees there clearly recognized the world was moving on from their worldview. And it's probably a good thing. Some of the write-ups I've seen from folks who attended, from some of the video clips you've seen, from some of the presentations and conferences and panels they had, there's sort of a mourning, M-O-U-R-N-I-N-G, a kind of a mourning, sad tone to it, frankly, that I'll apologize for the phrase, global elites that would attend a thing like Davos recognized that the world was moving on from them. And I will say there was a self-awareness of it, probably a good thing. They all did seem a little bit sad, if I'm being sort of my reaction to these write-ups and these videos that you see and so forth. The world needs this sort of we know best worldview clearly needs to change. It is Trump's election. Whatever you think of it, it is Trump's election. The change is needed not just at Davos. It's really at all these kind of globalist organizations, and that's the IEA, it's the Conference of Parties, it's the United Nations, it's the European Union, and I say the EU here as a dictator or someone who can command what the world should be doing in terms of rules and so forth. And lastly, the Glasgow Financial Alliance for Net Zero. And I think if this were a Hollywood movie, you'd wish for G-fans to have a slow death. I'm not a Hollywood person. It should have a quick death. Out of all these organizations, I don't think there was anything more insidious than the Glasgow Financial Alliance for Net Zero, which tried to keep the world from getting the energy it needs. They may say that wasn't their intention. Nonsense. What else is the point of limiting financed emissions financed? So I apologize. I wish a quick death upon GFANs. I think for these other organizations, it's going to be a question of how and how do you reform them? I don't think the Conference of Parties is going away. I think, again, as an example of how society is going to define its future goals, it's going to be downgraded from there. The one I'll focus in on is the IEA. They still have probably the best energy supply demand data. I was going to say oil, but frankly, some of their work in other sectors is also excellent. And how do we get them to just sort of get back to what they've always been and why they were originally created, to ensure the world has sufficient energy and to get out of the climate is all that matters imbalanced view that they exemplified as much as anybody over the last 2 years. And I'm going to be hopeful that the IEA can write the course, because I think it actually is a really important and otherwise valuable organization that I've personally utilized. Whenever I've met people who work there, I've always appreciated those engagements. And that's the one I'm going to say, please, can we get the IEA fixed, if you will, to have an appropriate balance on all the different interests that the world focuses on. So the last topic I'm going to talk about, and again, I'm going to keep it energy focused, I'm going to try my best, is the inauguration of our 47th, previously our 45th president here in the United States. And we, of course, have seen in just a week and a half a heck of a lot of energy policy volatility we've had, or that's going to impact energy. Potential tariffs on Canada impacts our heavy oil flows. Do refiners pay the price? Do Canadian oil sands companies pay the price? Do consumers pay the price? To be determined. Calls for Saudi by President Trump to raise production. The implication that Russia, Iran, and Venezuela either can, will, or should produce less. And then, of course, the declaration of an energy emergency. And then, not to be forgotten, there's talk about implementing tariffs on a whole bunch of different countries around the world. While that is not directly an energy kind of consideration, clearly could have impacts. And we don't know if they're negative or positive, whether they're material or immaterial. A lot is to be determined, but there's clearly an uncertainty. So if we sum all that up, we've said it before, we are really, I think by the time this video is published, it will be Secretary Chris Wright. I'm going to knock on wood because I don't want to jinx it, because I don't think it's official as of this recording. And it should be Governor Burgum. I think we would just say Secretary Burgum. I'm excited about the new energy team. There's a pragmatism that really meshes with my worldview. I've said it before, bettering human lives. Chris's write-up at Liberty is a sister publication, spiritual twins to Super-Spiked. But that pragmatism does not mean we're on track for some smooth energy bull market and that good times are here. I mean, we'll remind everyone, the 4 Biden years happen to have been better for traditional oil and gas stock price performance than the previous 4 Trump years. It's actually not a close call. The previous 4 Trump one was horrific for this sector. A lot of that's coincidence with where we are in the cycle and all those kind of considerations. But no one should confuse enthusiasm for 2 of the secretaries with it's just going to be a smooth path going forward. And again, Super Vol is our theme, and we are absolutely sticking with that. So I'd like to end this video on a personal note. And there's been a lot of talk about, quote, the return of common sense. And some of that has been directed at our university systems, which I think have understandably and perhaps rightfully been tagged as having gone way to the left in terms of a whole bunch of different issues. And I want to actually reflect, it's some training I learned at Goldman Sachs. Try and reflect on your own personal experience, not just what you hear from others or read in the papers or anything of that nature. I'm going to apply it to universities. I've had the great privilege to actually be invited to be a guest speaker at a host of different universities, at Columbia, which is pictured here, at New York University, NYU, Williams, Denison, TCU, and I'm going to feel bad that I'm probably forgetting a university I've spoken at, but again, a range of different colleges I've had the good fortune to meet with and talk about energy very much like I do in Super-Spiked in these videos to these students. I'll give you an observation. I think it is correct to say that many of our academic institutions are just directionally on the left. I'm talking about administrations, I'm talking about professors, and I think it's a problem, but that's not the point of this personal note. When I've spoken to the students, I've come away feeling really good that the youth of our nation are willing to hear a range of perspectives. And I want to give all the professors who asked me to speak, I think, deserve credit for recognizing that I have sort of a differentiated viewpoint than was common over the last couple of years on energy. But there's a professor in particular at NYU. He didn't ask to be in this video, so I'm going to give him a code name. I'm just going to call him Thomas. And I said, Thomas, Professor Thomas, I'm really curious. We know each other, and you have sort of the opposite worldview about climate versus oil and gas versus power and all these things than I do. Why have you asked me to speak? And he said, Arjun, while we may not agree on our outlooks, I think you are well considered in the views you present, and I want my students to hear a different view. And I'm going to say I take a lot of comfort in that. And then when I get down to, and I appreciate it from Professor Thomas, I want to say that when I've met with these students, it's not like some of the examples I've seen protests on campus and some of the real left-wing protests you've seen. I have really enjoyed all these engagements. And while it's not something I do on a full-time basis, probably mercifully, I think there's a need for all of us that have pragmatic views on energy to go engage directly. I know there's some prominent oil executives who've done that. I know Aubrey McClendon, the late Aubrey McClendon, used to do that. He probably had a little bit more of a confrontational style than I did, as I understand it. But I think you have to go out and engage. And I think I view it as part of the responsibility for someone who's attained a more senior position in the energy sector and who otherwise feels strongly that the conversation needs to change. I think you need to go and explain things. And I come away feeling very good about the youth of our nation. With that, thank you so much.